Welcome to the live RIU GoodOil Investor webinar, where you get the opportunity to hear directly from the management of a selection of outstanding ASX-listed oil and gas companies. We have handpicked three great companies to present today, and they are Empire Energy Group, ASX EEG, Melbana Energy Limited, ASX MAY, and Strike Energy Limited, ASX code STX. Each presenter will give a 10-minute presentation, and you can use the Q&A function at the bottom of the screen to ask questions, which I will put to the presenters at the end of their presentations. If you miss part of the webinar, don't stress. They are being recorded so we can share with you early next week. That's the housekeeping out of the way. Time for me to introduce our first presenter, Alex Underwood, Managing Director of Empire Energy, ASX code EEG. Empire recently updated shareholders regarding the upcoming EP187 Carpentaria 1 exploration drilling campaign in the Northern Territory's Beetaloo sub-basin. With more on that and to provide an overview of the company, I'd like to now welcome Alex to present. Thank you, Alex.
Thank you, David. Great to join you. And I'm very excited to have the opportunity to share the Empire Energy story with all of you today. I think the key message I would have is that the shale gas revolution is coming to Australia and Empire Energy is playing a leading role in it. We're listed on the ASX. We raised some money late last year, so we have our upcoming drill program funded. And also over the last couple of years, we've substantially reduced our debt burden by over 80%. We have very supportive shareholders, with our largest shareholder being Macquarie Bank. And the board of directors have invested over $4 million in the last couple of years. And now own over 7% of the company. Turning to the next slide. We've built a great board and management team over the last couple of years. So our board are all new. John Warburton is our technical expert on the board. He was responsible for identifying the potential of the McArthur Basin and Beetaloo Basin in our property sets, as a result of which we have our commanding position. I've been with the company for a couple of years, having previously been in oil and gas and resources banking. John Geraghty, our non-exec director, was one of the founders of Macquarie and a highly successful businessman in his own right. Paul Espy, our chairman, is a highly respected mining and finance figure in Australia. And Peter Cleary has joined our board quite recently, having had a distinguished career at BP and Santos. We've also built a small but highly effective management team with David Evans, our Chief Operating Officer, Kylie, our Financial Controller, Alex Bruce, our Head of Geoscience, and Ben Johnson leading our commercial efforts. Moving on to the next slide. We've had a big year to date. So as you're all aware, COVID-19 has had a dramatic impact on energy markets. We saw oil go to negative $40 a barrel at one point. We came into this downturn well placed, with debt reduced and an increased cash position. We carried out a seismic program late last year, which has shown that we have a very substantial Beetaloo Basin holding in our southern tenement. We've been given an independent prospective resource estimate from Netherlands Sul of 13.5 TCF of gas, and we've got approvals in place and we'll be drilling later this quarter. Moving on to the next slide. We were one of the pioneers that led this shale revolution to Australia. So it's had a dramatic impact on the US. And we were really one of the first companies to identify the potential of shale in our own country. Moving on to the next slide. John Warburton, our director, looked in the files and found the results of a mineral core hole drilled adjacent to our properties, which encountered the Barney Creek Shale. And if you move to the next slide, it unexpectedly caused a gas blowout, as a result of which we realised that there was a very substantial hydrocarbon province in place, and we were able to lease up 14.5 million acres of ground. Moving on. If we just go to the next slide, please. This slide shows the productive units of the Beetaloo in the southern portion of that map, where the colours are cool. That's greater depth to basement, and then up in the McArthur Basin central trough further to north. and we have a commanding position with a very substantial resource potential. If we move on to the next slide. This demonstrates our holding in the emerging province of shale gas for Australia, and I'll be showing you shortly where some of the other players are in the basin. If we keep moving on. The resources of the Beetaloo and Marcella and McArthur basins are quite enormous on a world scale. So there's a prospective resource estimate of about 250 trillion cubic feet of recoverable gas in the McArthur. That compares quite closely to the overall resources of the Marcellus shale. The Marcellus now produces about 30% of America's natural gas and has really transformed their economy. If we move on. This shows the extraordinary impact that shale gas has had on the US economy. So from a standing start in the year 2000, now over 70 billion cubic feet of gas is generated per day from shale basins, and it's really transformed their economy. If we move on to the next slide. This shows that the technical characteristics of the Velkerri shale, which is the most prospective and well-developed shale in the Beetaloo sub-basin, compares very favourably to the Marcellus. If we move on to the next slide. There's a key difference between the shales of the Northern Territory and some of the most prolific shales in the US, and that is that these shales are incredibly thick. So the Marcellus shale, which as I mentioned, is responsible for approximately 30% of America's domestic gas supply, is only about 25 metres thick on average, whereas the Velkerri is some hundreds of metres thick, which generates enormous resource numbers in place. If we move on. As I mentioned before, we have recently had Netherlands Sewell & Associates provide us with a prospective resource report. We thought it was really important to get a highly regarded international resource consulting firm to provide us with that report, and they've assessed a P50 best estimate recoverable of 13.5 TCF, which is about enough gas to underwrite 3 LNG trains. Now, obviously, this is a prospective resource. It's not proved and probable reserves, but we're getting on with the job of adding value to our properties and proving them up. If we go on to the next slide. There are significant markets for this gas in Australia. So the Northern Gas Pipeline connects the Northern Territory shale basins to the East Coast. But also Darwin is a major LNG export hub already, with both the Darwin LNG project operated by Santos and the Ichthys LNG project recently developed by INPEX and Total, which was a $43 billion investment. Moving on to the next slide, please. While LNG markets are currently quite depressed due to COVID-19, there will be very substantial increases in demand for LNG right throughout Asia in the decades ahead, and we are extremely well placed to satisfy that demand. If we move on to the next slide. This shows who some of the key players are in the basin. So we have the orange area that extends right up through East Arnhem Land. Immediately adjacent to us on the western boundary is Santos. They are making substantial investments, having made very major discoveries in the Velkerri shale. Immediately to their west is Origin Energy. Origin is also making very substantial investments in the hundreds of millions of dollars. They've drilled the first fracked horizontal well in the basin, Amungi Northwest 1H, as a result of which they lodged a discovery notice with the government. They've drilled their second horizontal well, Kyala 117, and they'll be doing a frack job on that next as they move to appraise these major discoveries. So there's an exciting element to our story in in terms of the technical nature of shale, which is that it's laterally extensive across very large areas, almost like pancake geology. And therefore, the technical learnings of us and our neighbours can all increase our respective holdings. I note further that there are other major players with holdings in these basins, including Hancock Prospecting and Inpex. If we move on to the next slide, this shows where we sit in the Beetaloo sub-basin and where the existing and planned activity is in the basin. So in the middle of the basin, you can see Origin Energy, and I've mentioned the 2 wells that they have drilled to date. The next well they will be drilling will come right over to our side of the basin called Valkyrie 76. Santos has drilled Tenambarini 1, which was a discovery well. They got very exciting results from a vertical frack earlier this year, and their next stage will be to drill 2 further fracked horizontal appraisal wells. Horizontal drilling and fracture stimulation are really the key breakthrough technologies that caused shale gas to explode onto the map in the US and now become the dominant source of gas supply. As you can see, our well will be drilled in EP 187, and that well is planned to be drilled this quarter. If we move on to the next slide. As I mentioned, Santos's vertical frac tests in January this year were very exciting. They achieved over 1.2 million cubic feet a day. Importantly, it had a very high methane content and very low CO2 and inerts. And as I mentioned, Origin has started their fracked horizontal appraisal program with Kyella 117, and our seismic results demonstrate that these very laterally extensive shales extend into our tenement at depth and thickness ideal for petroleum development, and we expect to be drilling this quarter. Next slide, please. As I mentioned, we have clearly demonstrated with our seismic program late last year that these shales extend into our tenement, and we've been able to optimise our drilling location on the basis of the 2D seismic program we carried out. We were the first junior in the basin under the new regulatory framework to carry out any on-ground activity, being the seismic program, and we will be the first junior in the basin to drill later this quarter. Moving on to the next slide. If we can just get on to the next slide, please. This slide shows the continuity of the shales from Santos's tenement into ours, and specifically tied to the well control of Tenambarini 1. So we can see that these shales are extending into our tenement, and we'll be drilling our first well targeting the shales that are prolific in Santos and Origin's tenements. If we can move on to the next slide, please. This is the well objectives of our well that we'll be drilling. So we'll be going to 2,900 metres. It will be to prove and identify the extension, depth and thickness of the target shales and give us a greater understanding of the rock properties, hydrocarbon content, permeability and reservoir pressure. And that will really set us up to carry out first a vertical fracture stimulation and then ultimately take this well horizontal. We are investing in the design of this well to allow it to be suspended and re-entered for further appraisal work in the year ahead. And so on that, I'd like to thank you all very much for your attention, and thank you, David, for hosting us today.
Thanks, Alex, and thanks for a great presentation. So a couple of questions that have come through. How important is it for your neighbours to be busy, and what do you learn from them when they're active?
Certainly. So there's a big difference between shale and conventional oil and gas. So typically in conventional, you're looking for a trap And then when you identify the trap and you see the markers on seismic that there may be hydrocarbons present, there's quite a high technical risk of success, i.e. whether or not you'll find hydrocarbons. But then typically if you do find hydrocarbons, the commercial chance of success is quite low. The key difference with shale is that it's so laterally extensive across hundreds of kilometres, and the rock properties tend to be quite similar over large areas. So we, in the shale industry, it's really not so much about making a discovery, but rather optimising the well completion design, i.e. taking the well horizontal and coming up with the optimal fracture stimulation job in order to maximise your flow rates, both initial flow rates and the overall recovery from a well, to maximise your economics. And so therefore, there is a significant benefit that we will derive from the learnings of our neighbours in terms of how they will complete their wells.
And in terms of infrastructure, clearly that's a key, particularly in this part of the world. Looking back at the map on one of those earlier slides, despite the fact you're in the Northern Territory, which most people would think is very remote, it looks like you're very infrastructure endowed.
Yeah, so there is certainly infrastructure in place. This resource is so large that upon commercialisation, there will need to be further infrastructure development. You know, I envisage that an early market for this gas will be to go down through the Northern Gas Pipeline into the Australia's east coast, which, as we know, has had problems with supply. But ultimately, this resource is so large that it will really attract large consumers from North Asia, and therefore need LNG export terminals to be exported. I think the key piece of infrastructure that will need to go in to facilitate that will be further pipeline infrastructure up to Darwin. The Northern Territory government is not only very supportive of our industry, but also they have great foresight and vision. So they have set aside additional very large blocks of industrial land in Darwin Harbour, adjacent to the existing LNG plants, to facilitate further LNG development, but also downstream petrochemical manufacturing to not only export these valuable energy molecules to Asia, but also add value to them in our country.
And in terms of the McArthur Basin itself, what do you think the prospectivity of the entire basin looks like?
So the Greater McArthur Basin actually covers a very large swathe of the Northern Territory, and the Beetaloo is actually a sub-basin of the McArthur. So the original sediments laid down were in what we call the McArthur Basin Central Trough, and we've really got our hands on the vast majority of that. And then the Beetaloo was a sub-basin that developed you know, a relatively short time in geological time after that. These are incredibly old rocks. This is about 1.5 billion years old, this geology, but they come from, you know, similar geological ages. The amount of resource potential is truly enormous. I mean, the Northern Territory Geological Survey, which is totally independent of industry, it's a government body, has estimated that the Middle Velkerri shale alone in the Beetaloo has over 500 trillion cubic feet of gas in place. And that's only a small subset of the broader potential of these basins. So we really see that they can be truly transformative to Australia's energy sector in the decades ahead.
Well, great presentation, Alex. Investors always love imminent drilling. And as you say, drilling in this quarter will certainly be something that will pique investor interest. We'll definitely watch Empire Energy with interest. Alex, thanks for your presentation.
Thank you very much, David. Greatly appreciated.
Our next presenter is Andrew Purcell, Executive Chairman of Melbana Energy Limited, ASX code MAY, who will present a short update on preparations for the drilling program in Block 9 Cuba. Andrew, we look forward to your presentation, and over to you.
Thank you, David. Good to be here. I appreciate it. Melbana is an ASX listed company, and we have a number of different projects. But the one I'm going to talk to today is our drilling program that's taking place in Cuba that we are very involved in planning for at the moment. The overview of the company: we've been listed for 20 years plus the board of directors and senior management team have decades of experience in oil and gas, mostly from BHP and ExxonMobil. What we have invested as a board and management in our company is shown by the percentage of the company we own. We've committed ourselves very strongly to our portfolio, and particularly now to Cuba. And that is a very important project for us to deliver for our patient shareholders that have, like us, waited a long time to see just what the potential is of this very exciting hydrocarbon system we're involved in there. The next slide is a overview of our projects. Generally, we have a couple of projects offshore in Northern Australia. As Alex has just said, it's a very busy part of the world now. There's a lot happening up there, and our projects up there are of great interest to us as to what development pathways may appear for them in the future. But Cuba and the Gulf of Mexico is our immediate focus. On to the next slide, where we have taken ourselves into a remote part of the world, some people may think, but our technical team, the gentlemen who were senior members of ExxonMobil's New Ventures team for many decades, have particular expertise in the type of geology that occurs in Cuba. Hence, that's why we ended up in that part of the world. That was an important early consideration to think we could value add to the understanding of that petroleum system. But there are other boxes that you tick. Being an investor in emerging markets for many decades, there's much more than just the potential of the resource. It's what is the fiscal environment, what is the security of your investment, what is the ability to repatriate any eventual profits, is the infrastructure capable of delivering on a discovery, and what is the access to workers like. We've found Cuba in our preliminary due diligence before entering that country to score well in those regards. And our experience of having operated there now for 5 years has been really a first-rate jurisdiction in which to operate. On to the next slide. We have, of course, as a small company, a business model where we identify opportunities and then do, I think, very good technical work, which allows us to attract global players of scale to capitalize on our early work to then test the opportunities we've identified. We're very pleased to have secured a partner late last year in the form of the National Oil Company of Angola. Sonangol and Angola is the second largest oil producer in Africa. They're a vertically integrated company, and they have enormous capacity and depth in which to share with us their experience in the oil industry. And they've come in to this project with us to allow us to test our theses. They agree with the two best prospects that we've firmed up, which I will talk to more in a moment. They are very much committed to Cuba and to getting this well program done. And they're funding 85% of these wells in order to earn a 70% interest. And importantly, they have asked us to remain as operator. I think that is a great thing for us, being a small company with an enormous partner. In my experience of similar arrangements in the past, it's very difficult for little companies to control costs when they're the tail wagging the bigger dog. And big companies do things differently to small companies. So with ourselves as operator, we are able to keep a very tight control on the costs and run this program as if we were having to fund it all ourselves. On to the next page. Where we are in Cuba is important too. Cuba's got a long history of discovery and oil, particularly along this northern coastline. You can see Havana on the map there. That scale is very small by Australian standards. Where we are to the east on that northern coastline, where all of the major discoveries in Cuba have been made. This northern fold belt, we're about 100 kilometers to the east of Havana on blacktop sealed roads, good infrastructure, even terrain, and very close to the coast. To the northwest of where we are is the Varadero oil field. That was an 11 billion barrel discovery. And we're on structure to that and proximate to it. So all the infrastructure with that oil field, the pipelines, the deep water terminals, etc., are all available to us in the event of a discovery. So it's not a concern that there would be a huge infrastructure development requirement were we successful in this 2-well program. It in fact be one of the easiest projects I think I've ever been involved with, if we are fortunate enough to get to that point. On to the next slide. What we've done in the years to now, since we were awarded Block 9, is we have applied our ability to gather and analyze all of the existing data that existed in Block 9. There were several vintages seismic, there were gravity surveys, there were previous wells that had been drilled, and some of which had intercepted and flowed hydrocarbons. And putting all of that together into a thesis of, well, what should we be going after here, was really just a matter of doing the work that nobody had ever done before. Certainly not with our Western eyes, using techniques and experiences that the team had gathered doing projects all around the world. We have identified many prospects. We similarly had our work analysed by an independent expert, the Canadian company McDaniels in this case, who had a lot of experience in Canada, working for other oil companies that have been operating there for many decades. They've put a 16 billion barrel oil in place potential in Block 9, and 650 million barrels of prospective resource. So we're operating in a world-class and scale opportunity here, which is very exciting for our shareholders. Taking all of that information and onto the next slide allowed us to define our 2 preferred prospects and the 2 wells we will be drilling in Cuba. The graphic up on the top right can perhaps most quickly summarize what it is we're doing with the first of these 2 wells. Marty 2 and Marty 5, previous wells that were drilled in Block 9, both recovered hydrocarbons. Marty 5 in particular, of great interest in that the oil that it recovered, a much lighter crude than is typically found in Cuba. That's because probably we're going deeper. Things can have different chemistry at depths to what they're traditionally bringing up in Cuba. But when we overlaid the gravities with the seismic and the other studies that were available to us, well, we formed a thesis as to why these wells were successful in recovering hydrocarbons. There are some massive structures that we're targeting. And what we wanted to do was get the biggest bang for buck out of this first well. So the proposed Alameda 1, as you can see, is a slightly deviated well, only a 30-degree deviation. But what that does allow us to do is to test 3 structures in the one hole, what we call the U1 on the way down, that has been shown to contain hydrocarbons. The N structure, but then the real prize, the real target that we're going for is the last and deepest structure, the Alameda structure, that has a best estimate of 70 million barrels of oil. And it has been given quite a high chance of success for a successful well of 32%, high relative to oil and gas exploration, because of these previous discoveries, I think is what would have given the most confidence to the independent expert who assessed this risk and volumes. So 3 wells for the price of 1 and 3 targets, which is what makes this a particularly exciting opportunity and the one we will be drilling first. on the well program that we have planned at the moment. On to the next screen, we'll follow up this first well by a second well nearby that we call the Zapato well. This does only have the one target that we're going for, but what's very exciting about Block 9 is in the middle of Block 9 there is an oil field called the Matembo oil field. It's been discovered well over 100 years ago and has a very light crude in this oil field. And the question that we have is, well, what is the source of the hydrocarbon for this oil field? And analysing the data that we've received sitting underneath Matembo are some volcanics. These are clearly not the source of these hydrocarbons, but underneath those volcanics, there's a very large structure, the one we've called Zapato, which is a very good opportunity to be the source of the Matembo oil field. And so our second well is going to drill straight into Zapato and test whether that theory is correct. 95 million barrel best estimate for it. Still a very good chance of success by oil and gas exploration terms. So these two wells together that will be drilled one after the other are testing 240 million barrels of oil over 4 separate targets. And they're being drilled onshore. They're close to infrastructure, good all-weather access, flat ground, and the logistical challenges that have been added on to drilling oil and gas wells in this particular environment, this COVID-19 environment, have largely been managed by virtue of the fact that the drilling contractors and service providers that we intend to engage in, which we will be announcing shortly, all have people and equipment and capacity in country already. And they're international firms, but they've been operating there a long time. They've drilled hundreds of wells. So we're leveraging that experience and that in-country capability to allow us to operate in any reasonable assessment of what happens to the world going forward with regards to COVID-19. So our planning for these wells is advanced. The permitting is completed, and on that point, operating in a country like Cuba is a sheer delight from a permitting and development point of view. It's a one-stop shop. The regulator, CUPET, the Oil and Gas National Company of Cuba, is the one regulator we have to speak to for everything from land access to environmental permits to drilling permits. So the permitting system is done. It's locked in. It was done on a reliable time frame without any hiccups whatsoever. And that's been a bit of a delight after some of the projects we've been involved in this company and others over the last few years, to be able to do something on a known time frame to a known budget. So we're looking to spud the first of these wells. We're working up the final timeframes at the moment. We're about ready to start pad constructions. Maybe we'll spud by the end of this year, perhaps early this next year, depending on how a few things turn over the weeks ahead. But this is a great opportunity to be part of a test of a very significant volume of hydrocarbons that's funded and will be drilled. And the Gulf of Mexico, Cuba is no exception, has a very low cost of discovery and production, typically historically $10 a barrel or so. So you're in the first decile of the global cost curve as well. So thank you for your time and your interest in our company, and I look forward to continuing to update the market as we make further and closer steps to spudding this first well in the months ahead.
Thanks, Andrew. A great presentation and an interesting part of the world, but as you say, logistically and operationally, a very good place to work. Couple of questions, and you may not have detailed this to the ASX, so if you haven't, please feel free to knock it on the head. But do you have an idea on what well costs would look like, and are you fully funded to meet those costs?
Yes, of course, we've costed out the well, so we've had to run an international tender for all the services that we would require to drill these wells, and that has allowed us to put a very firm budget together, which has been the basis of Sonangol signing off on this project. We're revising that budget at the moment. The world has changed in the last few months to test whether some things can be done more cheaply than when we ran this tender a couple of years ago. And there are opportunities for cost savings. But to answer the question you've asked, are we fully funded? Yeah, we're fully funded based on the deal we've done with Sonangol, and certainly fully funded for the first well and to get that started, and probably also fully funded for the second well. But there's some questions still outstanding based on this review of the budget we're doing at the moment.
And in terms of the Sonangol agreement, when do you expect funds to drop, the repayment of the monies outlaid?
They should be any day now. We have a final condition precedent under our agreement with Sonangol is Cuban regulatory approval for Sonangol being formally registered on the Block 9 PSC. We've been told that that has verbally by the regulator that has all been approved. The logistics of getting the paperwork done is what we're waiting at the moment. We don't have a firm timeline to view that because moving paperwork around the world at the moment is not as straightforward as it once was. But it really is just a procedural part at the moment. But once that's done, then the project commences in earnest, and all of the steps, including the repayment of the past costs that you just meant to, will be completed. We've already received some money from Sonangol in advance of that CP being satisfied, which was pleasing, because they're keen to get this well drilled too and didn't want to hold anything up.
And just finally, this presentation was clearly about your Cuban assets and the immense opportunity in Cuba. But can you just touch briefly on the Australian assets?
Well, a lot happening in Northern Australia. Beehive is an exciting play in our WA 488 project area. We had two good partners there, Total and Santos, that funded a new 3D seismic acquisition over that structure, but they didn't go ahead with the option they had to drill that well. But there is interest from other people, and we're talking with parties looking to take advantage of all that work and all that drill readiness and permit readiness to drill that well, but we'll have more to say on that in time. We have received a 1-year extension from the regulator to the current permit period to give us more time to drill that well too, which is pleasing. The other project we have up there is the Tassie Shoals project. That's been of great interest to many of our shareholders for many years, but wonderful concept, good interest from large trading partners and industrial companies out of Asia for such a project. The gas supply for those methanol and LNG plants offshore is what that project turns on. And for the first time in many years, that's in play. E&I have a process started now to look at divesting their Australian assets. That's an immediate gas field next to Tassie Shoals, which would be a perfect supply for us. So that's something we're doing a lot of work on and having discussions with at the moment too. And we look forward to having more to say about that in the months ahead too, I hope.
Andrew, a great presentation. Melbana, clearly a company to watch. We look forward to seeing the news flow over the coming weeks and months. Congratulations on everything you've achieved to date. Thank you very much.
Thanks for your time.
Thank you. Now, our last presenter is Stuart Nichols, Managing Director and CEO of Strike Energy Limited, ASX code STX, who has very much a local feel as the company continues to systematically deliver against its vision to become a major producer of domestic gas in Western Australia. Stuart, over to you.
Yeah, thank you very much, David. And thanks for everyone for joining us here at the GoodOil webinar. You know, since we last spoke, I think late last year, Strike's made an incredible amount of progress against systematically delivering its vision of becoming a major West Australian domestic gas producer. That can be evidenced in the amount that we've achieved in the first half of this year, which late last year we managed to raise $31 million. We've also prepared, procured, and achieved regulatory hurdles to drill up to 3 appraisal wells with a campaign starting and commencing in Q3 of this year at West Erregulla. We've announced a partnership with the Australian Gas Infrastructure Group to deliver our gas plant and transmission pipeline on a build, own and operate basis, saving the company significant capital in the development of our projects. We've commenced major geotechnical works to prove up the material additional resources around the Permian gas fairway and the Jurassic wet gas play. And lastly, we've achieved significant status by the Department of Premier and Cabinet here in Western Australia, with lead agency status being given to West Erregulla. And yes, as of yesterday, we announced a farm out with Talon Petroleum for 45% non-operated interest to help us accelerate appraisal drilling at the Walyering gas field in the Jurassic wet gas play. The previous notice is an important notice to read in conjunction with our resource statements, as well as any future statements that you see in this presentation today. But with the slide in front of you, I think that what we can summarise from Strike is that we are a Perth Basin developer, appraiser and explorer all in one. We're achieving a lot in a short period of time, which is recognition of our very strong in-house team that we had during the exploration phase of West Erregulla, and that has allowed us to accelerate through a period of time rather than trying to evolve into a developer in the Perth Basin. What we can see on the map on the right-hand side is Strike's significant acreage position, which it holds all of its permits at 100% currently outside of West Erregulla, EP 469, where it's 50% an operator. We have discovered resources from the very north to the very south of our trends in both the Permian gas fairway as well as in the Jurassic wet gas play in the south. You can see not only West Erregulla with its around 1.2 TCF gross 2C resources, with following 260 BCF of upside that we'll likely see throughout the appraisal drilling campaign, followed on by what is fast becoming one of the largest prospects onshore Australia at the moment, with South Erregulla sitting at around between 1.6 and 2.2 TCF strike share alone. That's rounding out the Permian gas fairway activities for us, where we're looking at drilling multiple appraisal wells, as well as committing to an exploration campaign sometime in the next calendar year. In the south, we have Ocean Hill that meets all the way down to the Walyering gas discovery. Both Ocean Hill and Walyering have flowed gas to surface, with impressive flow rates being achieved in one of the exploration wells there at Walyering. We've shot some of the groundbreaking 3D seismic over the Walyering gas field, and we believe we've cracked the code there in order to be able to delineate conventional hydrocarbon accumulations. And we'll get on with an exploration and appraisal campaign in calendar year 21 as well. But Strike is one of the top performing oil and gas companies on the ASX in 2020, and that can be simply broken down into that we're a company with a major discovered resource. We're well capitalised at this point in time. The West Australian gas market continues to improve, and we're seeing excellent fundamentals for the following decade to come. Because we're onshore, adjacent and proximal to existing gas infrastructure, we have very low cost developments. And as we've started to point to throughout our portfolio, there is multi-TCF upside, which we plan to accelerate into the portfolio in the coming year. So if we move to the next slide, please. I just wanted to go through what is some of the major upheavals that have been occurring in the West Australian gas market in just this early part of 2020. We're going through unprecedented change in Western Australia as we move from very long-term stable gas pricing, where industrial gas users, which make up around 95% of a 1,200 terajoule a day gas market, are about to start to compete with the global LNG market. And that's fundamentally because the Northwest Shelf has had its backfill projects in both Scarborough and Browse delayed and deferred, as well as the Northwest Shelf life extension for the legislation has been pushed out to 2059, with approvals for it to be able to buy backfill from third parties. What you can see ultimately when you add the base case demand with some of the increasing domestic requirements coming from our increasing fertiliser businesses here in Western Australia, is that the West Australian gas market is starting to become undersupplied quite quickly. And I think that we might start to see not only the domestic market be short of supply come 2024, But when you include some of that spare capacity at the Northwest Shelf and you correct for a potential Waitsia backfill option there, you're still seeing that there could be up to 1,420 terajoules a day shortage required to fill not only the West Australian domestic gas demand, but also that of the existing spare capacity at the Northwest Shelf. When you look at the backfill projects in Scarborough, West Erregulla, Waitsia and Gorgon for both the domestic market and the Northwest Shelf backfill, they will simply be insufficient in their existing sizes and plans in order to be able to fill that demand. And so what we believe is that around 50% of the domestic market, which is currently not supplied by domestically reserved gas from the reservation policies of the LNG investments of the previous decade, we'll start to see pricing potentially become linked to WA LNG netback pricing as the domestic market for the very first time in West Australia may start to compete with international gas prices as the Northwest Shelf ullage and third-party tolling opens up in the latter part of the 2020s. Moving to the next slide. But what we have in the Perth Basin of West Erregulla, the Greater Erregulla development of South Erregulla, as well as looking to accelerate some of our Jurassic wet gas play activities, is we have a structural advantage over meeting the domestic gas market's needs. And that's purely based on the fact that a single pipeline connects the traditional supplies of the domestic market down to the southwest of Western Australia, which runs past the front door of the Perth Basin on its way. Because that is a single pipeline, it's obviously a regulated asset and must provide transparency on its transmission costs. And it provides a open and transparent pricing on a cents per gigajoule per kilometre basis. Given that some of the largest, most commercially developable sources of new gas in Western Australia are emerging 2/3 closer to the market, that can translate into material cost savings of over $1.10 a gigajoule for some of our domestic customers if they seek to get their gas supplies from the Midwest as opposed to the Northwest. And you can see that depicted in the existing visualization in front of you. The West Australian gas market, of which around 70% demand sits south of Geraldton or south of our discoveries, is around a $2.2 billion per annum market. And you can see that with a potential increase in pricing as some of that market starts to compete with the Northwest Shelf, we believe that fulfilling the domestic market is not only in West Australia's best interests, but we have a structural advantage in being able to meet some of the customer demands. Now, how are we going to go about doing that? And if we move to the next slide, you'll see Strike's flagship series of assets in the Permian gas fairway. Taking off from the Waitsia gas field discovery, Strike theorised that the major continental sheet sands that were picked up off the continental coast were deposited deep into the Dandaragan Trough towards the east, and that the porosity preservation mechanisms that were required for the Waitsia gas field to remain conventional in nature and to have its prolific flow rates that were recorded were indeed going to be present in the deeper into the Dandaragan Trough towards the east. Very similar to what we see in the Gulf of Mexico, offshore Nigeria, and some of the Viking grabens of those deeper in the North Sea. And we've started to finally get a picture of missing pieces of data as we move through West Erregulla down into the South Erregulla, and you can see on the seismic slice on the bottom left of the screen that you have in front of you is actually the Kingia has been picked all the way from the Hovia discovery through Waitsia, down through Warrendong, West Erregulla, and into South Erregulla. And what we can see is what is starting to come together and appear to be a mega trap or a mega closure in that bottom part of the trough there through that West Erregulla, South Erregulla area. And we've already started to visualize areas where we believe that West Erregulla and South Erregulla are in communication. So we've got more than 3 TCF already discovered in the North Perth Basin, and we suspect that there will be several TCF more to come. The Permian discoveries of Waitsia, Bahara Springs Deep, and West Erregulla have all been significant in size. They've all had material flow rates, and all the gas has been of a sweet specification with very low impurities. You add into that the existing 2 pipelines, both the DBP and the PGP, that run through the middle of the basin, and you actually have a very low series of low-cost developments. Strike's the largest acreage holder in this Permian gas fairway with more than 1,000 square kilometres of acreage, all of our permits being of operated status, which means that our greater Erregulla development strategy is starting to crystallise as more data is coming to hand. We expect to start to see developments of both West Erregulla and movements on exploration wells in South Erregulla in the coming 6 to 12 months. Talking about our development at West Erregulla, if we move to the next slide, you can see a picture that we continually put up to the market as we start to check off major pieces of the puzzle. Not only do we have a discovered resource that has a very high level of confidence for the phase 1 development, but we will be commencing up to a 3-well appraisal drilling campaign starting in Q3 of this year. We've sold 100% of our foundation gas to West Australian nameplate major industrial customer, Wesfarmers, which is great. We've got a contract that is supportive of bringing our gas on as quickly as we can, as well as one that will allow the development of free cash flows into Strike in order to be able to invest in further developments and expansions of the field or potential neighbouring fields. We've partnered with the Australian Gas Infrastructure Group on a build, own and operate model in order to defer very large amounts of capital for our initial development on a 50 terajoule a day gas plant and transmission pipeline, which can be scaled to 250 terajoules a day into the DBP. We're currently working on our financing and our project financing, which we aim to conclude at the time of taking FID, targeting Q4 2020 of this year. And that will be discovery to FID in 12 months. And because what we're starting to see in the West Australian gas market, these tightening fundamentals, we have a very long gas book of demand of people seeking gas supplies from Strike, more than 300 odd petajoules of demand at this point in time. And so we're conducting gas marketing activities for potential expansions of West Erregulla or foundation projects at potentially South Erregulla. Now, because this market is starting to tighten quite quickly, and if we move to the next slide, we've decided that we wanted to accelerate as many opportunities in parallel as we can. And so we started to look south into our southern permit acreage, which we classify as the Jurassic wet gas play, which covers the Catamara and the Cata Jurassic sequences. Now, this is a play that has been generated very disparate results across a series of different developments, but has supported commercial production via Empire Energy at the Gingin and Red Gully development south of Walyering. Now, Walyering was a discovery that was made many decades ago, where the discovery well flowed at 13 million standard cubic feet a day. There were several other appraisal wells drilled. Well, now we can confirm we're off structure or a down dip of what we believe is the accumulation. And with the 3D seismic that we shot in Q4, Q1 of late last year, early this year, we believe that we've got the level of information and data that can be a game changer in proving that the Catamara and Cata sequences are host to repeatable, reliable, conventional wet gas accumulations that have a very high condensate to gas ratio. And because we've been able to conduct significant quantitative interpretation over the Walyering field, with 92 square kilometres of 3D seismic over Walyering being the first high quality resolution data ever captured over the trend, we've been able to bring in Talon Petroleum, who has recently, as we announced on Monday, farming in for a 45% non-operated interest over Walyering in order to carry Strike for the first $6 million of an appraisal well over the Walyering gas field. We're very excited to bring that well into the calendar year 21 program off the back of the West Erregulla appraisal. And we'll be able to generate significant cost savings through the mobilisation and demobilisation and fixed costs of bringing a rig into Western Australia. And I think Strike is probably one of the only companies in Western Australia that's committing to any wells onshore or offshore for the second half of 2020. And I think that given the attack on the oil price that we've seen from the Russian-Saudi oversupply and to trying to capture back liquids markets and European gas markets from the shale producers of the United States, and the demand destruction that has come along commensurately with the COVID pandemic around the world, the fact that Strike continues to move at speed and at quality developing many assets in parallel shows you that our investment thesis is strong, and we have a resilient and robust strategy, and we're very well serviced by a very experienced board. John Poynton, our chairman, and Nev Power, who heads up the NCCC at the moment for the Prime Minister, being our deputy chair. And ultimately, that concludes all I wanted to talk about today. I'm happy to open up to Q&A. Back to you, David.
Stuart, thanks for a great presentation, and it's great to see a proudly West Australian company rapidly advancing some significant West Australian assets that hopefully will benefit not just your shareholders, but the West Australian economy more generally. Now, we do have a number of questions, and I'd love to take credit for them, but the first is from Mark Wiseman from Macquarie. How does the Chevron exit process at North West Shelf change your perspective commercially in WA? Do you expect the JV rearrangement could help you engage with the North West Shelf for gas sales?
Yeah, thanks, Mark. Ultimately, what we see at the North West Shelf is a precedent deal that will likely be done via the Waitsia development, carving the path for all other third parties to essentially be to be tested against, and that will create the alignment, I believe, from the existing joint venture that they have at the North West Shelf, and potentially new parties that will enter in, sort of starting to see the value from bringing third party volumes in and keeping those facilities full. So whilst the North West Shelf is an exciting upside opportunity for Strike at the moment, we definitely see the domestic market as our primary core focus. And if the Mitsui Beach developments at Waitsia and Bahara Springs want to push their gas through the North West Shelf, we would welcome simplifying that path to market and that commercialisation pathway.
And for those Strike Energy shareholders who may not know much about Talon, or may have some questions, I suppose, around their ability to fund that $6 million, clearly your due diligence gave you comfort that they are capable of delivering on the agreement with you.
Yeah, so Talon's an exciting sort of company that's rebirthing itself with some changes in its management and its strategy. David Casey, who was the ex-Australian CEO for Warrego Energy, who was our partner at EP469 West Erregulla, who Strike, and David have a very good productive relationship together from that discovery at West Erregulla, has come in as the new MD, working alongside Matt Warner, who's been working at Talon previously. David is a consummate professional in the industry, very successful at Eastern Star Gas. And given that the Walyering discovery or the Walyering field and its appraisal campaign coming up is a great entry for a company like Talon into the Perth Basin, it's an interesting way for that group of shareholders to play what is a fast evolving, exciting two-speed pricing market. And I've got all confidence that David and his team there will meet some of the CPs required for their participation at Walyering.
And in terms of, for your investors, what should they be looking for specifically in the next two wells in order to gain confidence in the P50 resource volume at West Erregulla?
Yeah, so the West Erregulla 3, 4 and 5 wells all have very specific objectives. West Erregulla 3 is being drilled into the northern fault block which makes up the West Erregulla structure. The 3D seismic amplitudes, which were a diagnostic for Strike to declare that West Erregulla was indeed going to be a porous hydrocarbon filled structure, are continuous across the two fault blocks. And what we have seen from the analogous structural setting at Waitsia is 4 linked fault blocks with major throw in between those fault blocks. We have very little throw between the two fault blocks at West Erregulla at the bottom part of the trough there. But what you're ultimately looking for is a series of positive results which underpin Strike's view of the full field commercial size of the resource, and they will obviously be delivered during the drilling campaign. West Erregulla 4, we are starting to calibrate some of our reservoir understanding and trying to understand whether there is reservoir heterogeneity or homogeneity, and how does the amplitude signatures of the reservoir align themselves with the subsurface results. We expect West Erregulla 4 to generate very good results, West Erregulla 2 or better. And then ultimately West Erregulla 5 and 4 are also about picking up additional information for the Wodgina discovery that was made in West Erregulla 2, which we don't believe is prevalent or above in the northern fault block, and ultimately we'll be able to bring that into the development cycle as well. Now, West Erregulla 2 was completed as a future producer, as well as 3, 4 and 5 will be. 4 and 5 are ultimately drilled about a one well spacing apart, about a 500 acre spacing apart. And by throttling those 2 wells on and offline throughout the phase 1 production profile, we'll be able to get a really good understanding of pressure depletion in formations, and that will give us a really finite or accurate view on ultimate recovery. So when we go to scale that second expansion at West Erregulla or for the greater Erregulla area, we can size that appropriately, not overbuild and not underbuild, and get it just right.
Well, Strike Energy, Stuart, clearly a busy company, well backed, well funded, a lot of work and news flow occurring over the coming months and into the second half of next year. Exciting times ahead for your shareholders, and we watch with interest. Thanks for your presentation.
Thank you, David, and thank you, GoodOil.
Well, that brings to a close our webinar for today. Thank you for joining in, and the presenters for providing such a great insight into their respective businesses. We will be sure to keep you updated on future webinar events, and will advise you once the recorded copy of this webinar is available to watch. If you are in WA and looking for a live in-person event, I know it sounds strange, but we're all getting excited to attend, then keep an eye on the Vertical Events website, as they are working on something very exciting for later in the year. Remember, do your own research, and where appropriate, seek professional advice prior to making investment decisions. Have a great day, and thank you for your participation in today's webinar.